What is going on today, YouTube? Today I want to talk about the rise and the fall of GameStop, what you need to know, and the trips and traps you need to avoid. Now, I'm sure you've all heard by now. Reddit just absolutely made GameStop explode, which I think, I want to tell you first, is awesome. It's great. It's a great thing. You know what? Actually, if we're getting all these hedge funds and we're actually competing to them as a unit of people together united, that's great. It's fantastic. But the most important thing I want you to understand is when when sometimes it's a good time to jump into stuff like this and all the hype and everything, and when it's a bad time. Now, if you're into the very beginning, a lot of people were watching this stock back in March of 2020. I got articles here that say Michael Burry was trying to say GameStop was too oversold, which okay, maybe it was. It was like $3 a share back then. And then all of a sudden, these hedge funds jump on and say, yeah, we agree. It's oversold, whatnot. And that's all fine and dandy. But think about this. This was March of 2020. And then pandemic happened, obviously, throughout the U.S., throughout the world. There's a major disruption. A major disruption in the economy. Places were shut down. Couldn't go anywhere. Couldn't buy things. Stores were like a no-no. So GameStop obviously blames all their sales losses and everything on this. Which, yeah, it's understandable. I mean, people weren't going out, people weren't going to stores, people were just hiding in their homes, whatever, waiting it out, see what happened. And in a way, I mean, this could have been something to try to pump up GameStop for a little bit, or this could have been something just he was being serious. And it was just terrible timing. I mean, the article came out March 25th, and everything pretty much started shutting down March 17th, at least where I am. So long story short, it took forever. And now we're in 2021, and now GameStop just completely takes off. All thanks to Reddit users that said, hey, let's pump up this stock price. They started talking about it. Memes started coming out and saying everything. Which, think about this. Back at that time, March 2020, they were saying it was oversold when it was about $2 or $3 a share. Now, if we'll look at this chart real quick. We started going up to $10 a share. We started going up to $20 a share. We started going up to $60. Started going up to $300. And GameStop's the highest price got up to $380. Opened up at $380. Closed lower that day. But intraday, the day before, was wholly up to $483. Now realize, from March of 2020 to today, that's up 8,000%. So you 80 extra money if you've been a long-time holder, which some people probably did. Some people probably were. And you know what? They made great money on it. But where everyone goes wrong is when you start jumping in these things after they get these gains. Everyone got all excited, and you see up at the peak, it starts going up and up and up and up. And that's when the media and a lot of people start hearing about it. And they say, hey, FOMO, jump in now. GameStop's going to $1,000 a share. GameStop's going to $10,000 a share. Which, at this point, it's just like legalized gambling for the everyday investor. Like me, you. If you're just jumping in all this hype, you need to be in before when this was like $10, $20 a share. And then it gets this hype, and you know what? You can cash out quick. And a lot of people did. They were in, cashed out, made a profit. But if you're the one, after all these articles are coming out, thinking, I'm going to jump in at this stock at $300 a share when, okay, love GameStop or not, it is not worth that much money. They've had decreasing revenues, decreasing profits, decreasing everything since about 2013. Guys, you can see on that chart. But the point is, it's not to bash on GameStop. It's to say, when a stock goes that insane, it goes up, it's going to come straight back down. So many things happen, especially when something's all hype. Now, it might be a little bit different if, say, GameStop, something new happened. Yes, I realized they had other people start working for the company and everything. Like the guy from Chewy came over and said, hey, we're going to turn GameStop around. Yes, that's a catalyst, but that's not a catalyst to send the stock up 8,000%. There's a big difference between a decent catalyst and something like this. Something like this, just stay away from it. Because, hey, guess what? Yeah, it could have went up to $1,000 a share. But the odds of that happening after already going up 8,000% and then all these stock exchanges shutting down trades on it, Like, that's just wrong to begin with. I don't even want to get into that. But you can't ride hype like this. When you're riding hype like that, that is seriously legalized gambling. And yes, you get in early enough, you can ride that hype and win. These are called pump and dumps. They happen to penny stocks all the time. But you can't jump in on something like this unless these is like fun money to you and you're just using it and be like, heck, if I lose it all, I don't care. If I gain a lot, I'll be happy. If that happens, yeah, great. But you just can't. Don't fall for these traps. These are the traps that lose you money. Now, if GameStop, on the other hand, was going up, they were making better profits, changing their outlook in the future, changing how they're doing things, actually giving them things to make a better profit, yeah, sure. Go all for it. All for it. But that's not what happened. It was seriously a pump and dump. It's like back in the day when chat rooms were a new thing in the internet, and they would start talking about them, hype them up, and they would say, okay, everyone in the chat room, we're going to go buy this stock tomorrow morning when it opens. And it's usually like a penny stock because it's cheap enough you can actually fluctuate the price that much. And then first one's in, first one's out. They make the most money. Last one's in, last one's out, you're going to lose money. Because first one's in, buy here, sell here. Last one's in, buy here, sell here. It's a huge difference, and you need to get this. So real quick, we're going to make myself small. Look at this chart, just so you know. All right, so now, just show you something else real quick that I thought was pretty interesting. We're going to look at this macro trend site. GameStop revenue from 2006 to 2020. One thing that I really want to point out. Well, actually a few things. So, they just came out with an 8K holiday sale report. It's 2020 holiday sales. Trying to justify themselves saying, hey, they increased 4.8% compared to last year and inflected 29.6%, blah, 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 blah. Now, net sales are $1.77 billion. That's key number right there. $1.77 billion, 31% increase compared to 2019. Strong console demand is offset by store closures. Again, trying to blame that they could have had a lot more profit and a lot better revenue, a lot more sales if stores were allowed to be open because of COVID-19 and everything else. They were closed. Regardless of all of that, I was thinking, okay, yeah, these new consoles came out, like the Xbox, PlayStation, all had new consoles out, right? Okay, when's the last time that happened? 2013. So I just want to point that to your attention. We're looking back at 2013 in November, right? That's when new consoles came out. You can see right here. This is their quarterly growth. So 2013, July 2013, before the consoles came out, -10 to +18. That's great. Fantastic. But the thing I'm getting at is, okay, so console prices have only went up. More people are supposedly buying video games now, and you're telling me 2020, yes, this doesn't capture the sales yet, but based on their 2020 special report for their holiday sales, their sales are all up. And guess what? Net sales, $1.77 billion. So I'm like, okay, let's compare this to 2013. See what the difference is. 2013, holiday sales. Total global sales were $3.15 billion. 9.3% increase compared to 2012 holiday sales period. So what that's telling me is, how much can you really blame this on COVID and everything? This is just, it's a shift in the industry. GameStop is seriously a dying company. There's no ifs, ands, or buts around it. They try to justify themselves saying, yeah, people want to come in, they want to see the video games for themselves, they want to play them, they want to demo them, but you can do that all online now. Everyone is getting faster and faster internet speeds, and all you got to do is click of a button, you can have a demo. Click of a button, you can download the game. Start downloading it, you go to sleep. So unless GameStop gets somehow, and I know they have a deal with Microsoft, but they get somehow the sales, or they get that internet service for the downloads, and that's how they start making money, it's not going to happen. People are just not going to stores anymore, and they're just not buying this stuff. In stores. They're buying it, just not in stores. So GameStop needs to stand out. That is the only way you can tell me they're going to be a profitable company again. Look back in 2006, they killed it. Because this online stuff wasn't a thing. I mean, yeah, it was a thing. You could start to buy stuff online, but I mean, eBay, Amazon, all those, they were early 2000s. 2006, GameStop was still a fantastic, that was like the go-to way to get your games. Now, there's other sources, there's other ways. You just don't need these stores. And I mean, this is the article I was talking about. It's over in Bloomberg. Korean hedge fund joins Michael Burry to bet on U.S. games seller. Just talking about like, hey, like they think it's an oversold, but yeah, it was oversold at $3 a share. Now we're gonna look at this chart real quick just to explain. It's at 51 today, and I mean I'm recording this on February 11th, 2021. That's still from March of 2020 when that article came out. They were 363. Actually, I can't say that. It came out March 20th. So they were $376 a share. So at that peak, and they were 380 that day. That's like a 9,000% gain. So yes, you could have jumped in. I mean, when it was going, if you were going to jump in, it most likely should have been when you started selling traction in November and December of 2020. And then if you really wanted to still jump in, you probably would have had to do it early January when this thing was trading in the teens. I mean, when it gets up to day over day, doubling, tripling, 10xing, pretty much from this point on, from that January 8th when it was in the teens to that January 14th at the 40s, if you want to jump in, you need to jump in on that first increase. And you could have probably made some money. But after that, don't jump in up here, guys, no matter what. That's what I was talking about earlier. Early in, early out. This would be late in, late out. The people that are the latest are the ones that get screwed. Could this go up again? Yes. Reddit could do the same thing, send this thing soaring. But be one of the early ones. If this drops down back to $10, $20 a share, and you think it'll happen again, then yeah, go ahead. But guess what? That time you're one of the first ones in, not one of the last ones in. And if you jump in at 20, hey, I mean, that's up to you. Like I said, it's gambling to begin with because unless GameStop changes their whole financial outcome, whole video process, whole everything, it's a dying industry. So that's all for the video, guys. Hope you enjoyed it. Don't fall out for these traps. See you in the next video.